everybody, it's Paul here from my channel Better Call Paul. Today is finally day 30 of my 30-day challenge in November to talk about 30 ETFs in 30 days. So today I have a very exciting ETF, at least I think it's exciting, to talk about. Before we get into that, I just want to say we finally hit 8,000 subscribers, which is very exciting. Still 2,000 away from my goal of 10,000 subscribers, but nonetheless, I'm really happy that we hit 8,000 this weekend. I'm thinking maybe my goal of hitting 10,000 subscribers by the end of the month or by the end of the year is maybe a little bit too aggressive. I don't know. Should we adjust that to 9,000 and give out the gift card once we hit 9,000? If we can do that by the end of the year. Anyways, let me know your thoughts in the comments down below. And of course, if you haven't subscribed to the channel, please do so. And just before we get started on this video, remember guys, this is not financial advice, okay? So yesterday we talked about an ETF that kind of got off on a bad foot, only because the underlying stock tanked on the same day that it was launched, right? The inception date, basically, the underlying stock, which was Reddit, dropped 10% on the very first day. So Harvest launched rddy at, I believe, $12 a share. And the first day, I think it was trading around $9. So a lot of people were buying it. You know, they saw it as a big opportunity to pick up shares cheap. And it hasn't fully recovered yet to, back up to a $12 share price. But the distribution at 35 cents is fantastic. So anyways, guys, today we are going to talk about an ETF that Harvest launched and did the opposite. They launched it at what would seem to be like the perfect time. As soon as they launched it, it skyrocketed. All right, so we're going to jump into the website and take a look at which ETF I'm talking about. So here we are in Harvest's Palantir Enhanced High Income Shares ETF with a ticker of PLTE. And the inception date was January 16th, 2025. So it's getting pretty close to being around for a year, and at which point they can talk about the performance of this ETF. Let's just quickly go over the overview for anybody who hasn't watched a previous video from Harvest. The Harvest Palantir Enhanced High Income Shares ETF invests all its assets in shares of Palantir. Palantir specializes in software platforms for big data analytics with customers that include the U.S. intelligence community and U.S. Department of Defense. Palantir's growing role in AI and expanding reach beyond government contracts has fueled the stock's meteoric rise. Okay, so let's take a look at the fund focus. So the fund focus, the Harvest Palantir Enhanced High Income Shares ETF provides access to the growth potential of Palantir and overlays an active covered call writing strategy on up to 50% of the portfolio. Provide high monthly cash distributions to its unit holders. It applies modest leverage of around 25% for higher income growth potential, and the units of the ETF are available in Canadian. I would assume that this one, they're probably not writing 50% of the portfolio because Palantir is such a growth stock that they want to capture more of the market, the capital appreciation by not writing up to 50%. All right, let's take a quick look at the fund details. It is PLTE, which holds PLTR. The current distribution is 65 cents per month. The NAV is 24.83. The market close was 25.05. Assets under management is growing pretty quickly at 148 million. It's Canadian unhedged. Management fee is consistent at 40 basis points. Risk rating is high again because of the leverage. As you can see, the historical price of PLTR, was, I guess, flat for quite a long time, dropped down quite a bit in 2023. And then you can see that end of 2024 into 2025, it just skyrocketed. And remember, we said the inception was January 16th of 2025. So this fund launched right around the time that Palantir was skyrocketing in price. So I want to take a quick look at the performance, well, not the performance, but the distributions. So you can see that it first came out at 37 cents, and then it went up to 45, and then it increased to 55. Okay. Just remember, guys, a lot of people say that ETFs, covered call ETFs, only cut the distribution and you're losing income. Where you can see on this one here, it's had 1, 2 already increases, and now a third one, right? It went up to 65 cents. So this just goes to show you that when these funds are doing well, when the underlying stock is doing well, when the ETF provider like Harvest is managing the fund well, you can increase the distributions along with that and not be paying out return of capital. Portfolio breakdown. Of course, the holding is Palantir, as we said before. I'm going to jump into my Wealthsimple, and you can take a look here and see that the 1 year return for this ETF is 93%. Now, some people might say, if you had to own the underlying stock, which is Palantir, you would have made more money. I often find that those people also don't hold the underlying stock. They usually hold something like VFV or XEQT, so they haven't even gotten a 93% return. Okay, so for myself, you can see I currently only have 50 shares in my TFSA and 154 shares in my non-registered account. When I bought them in my TFSA, I got a great price. I actually bought my first, I think it was 100 shares around 12 something. But I have sold some shares to take some profits. But currently, you can see the distributions. I get 32.50 from my TFSA. I get 100 in my non-registered account. As I was saying, I did sell some. I tried to catch the top around 28, 21. I think the high was a little bit higher than that. 52-week high did go up to 31.20. Anyways, when I sold my shares, I made $585. So guys, as you can see, Harvest was able to launch PLTE at a great time. Had you have bought in early, you would have had a lot of capital gains, unrealized capital gains, but you'd have a lot of capital gains at this point in time. And not to mention that the distributions have gone from 37 cents to 45 to 55 to 65. So this is a great ETF to hold. It is a single stock ETF, so you have to remember that increases the risk level, and it is leveraged, right? So it's going to shoot up fast. It's also going to crash fast. So you just have to be aware of these things, right? It's kind of like MSTE right now. It went up really quickly to $19. It's come back down below $6. People are panicking and they're all upset. So you can't buy these high leveraged ETFs expecting them only to go up, right? The market doesn't work that way. Sometimes stocks actually go down. Okay, the great thing about these ETFs is they keep paying monthly, and you can either buy more shares, or you can use the money to diversify into other holdings, or you can just use the money, spend it. Anyways, guys, I have a very small position in PLTE. I will probably try to pick up some more, the next time it dips as low as I can get it. But that's just for me. I also hold a lot of PLTE in my HHIS position because I have almost 6,000 shares. So regardless of whether I have any of the individual ticker, I do have it in HHIS, which is why HHIS is such a great fund to have, because then you get exposure to all 19 of their single stock ETFs. All right, guys. Well, like I said, this is the last video for this November series. I'm going to go back through, watch all the videos, make some notes of maybe things that I've learned along the way. And if I think there's enough content there, I might do a video of what I learned by going through almost all of my positions in 1 month and just kind of reassessing where they're at in my portfolio. All right. So just remember, guys, this is not financial advice. Please, do your own due diligence, your own research. Check out Harvest's website if you're considering buying PLTE. Look at the price performance. Don't throw a lot of money in when it's at an all-time high price and then be disappointed when it drops. Okay. So figure out your strategy, how it works for you. And if you decide to, pick up some shares, do it responsibly and not in a way that you're going to hurt yourself in the long run. Okay, guys. So I hope everybody had a great weekend. And until tomorrow, bye for now.